Now for Insight by our featured guest of the morning, he's Patrick Horan, principal at Agilith Capital. Patrick, thanks a lot for joining us.
Thanks for having me on.
Investors are getting a rude lesson once again at the perils of the commodity market.
Yes, yeah, and this is a seasonally low period for oil. It's usually the strong period is February till July. So, you know, it's understandable that we're seeing a pullback here. There was a lot of speculation in oil, thinking that the rationale being that the Saudis would hold it up and maintain the price. And then you also have the strategic reserve situation in the States where they're probably going to come in and buy below 70. So I think people are pretty comfortable there's a floor here. I just see it as just really a massive swing in algo trading and speculation. Okay,
let's go to another expert on the topic, Julian Lee. He's Bloomberg's oil strategist, and he joins us now. Julian, thanks a lot for giving us a bit of time this morning on our top line story. What explains this big rundown in the price of crude oil over the past month or so?
Well, I think there are some fundamental factors as well as the sort of algorithmic trading and speculation that certainly the Saudis have pointed to. We are seeing a softening of physical crude prices. These are the prices at which actual barrels on actual ships are changing hands. We're seeing more supply coming onto the market. We've had a new startup in the last week or so in Guyana. We've had some rising production in the US. We've had some increases in Brazil. And the outlook going forward, I think, is softer than it was. We're seeing big differences of opinion in just how strong this final quarter of the year is from the analysts at OPEC and those at the International Energy Agency. The International Energy Agency seeing a much smaller deficit than their counterparts in OPEC. And we're still seeing some worries about demand and the strength of demand growth. And I think all those have factored into this, plus some easing of the concerns over a widening of the conflict in Gaza and the possibility of producers getting sucked into that.
Julian, in the spring and summer, we heard about price discipline and production discipline from the producers in North America. And it seems like there is excess supply out there. Is there any thought here that this could be just increased black market overflow from Russia and some of the more illegal areas of production, or the like leaking into the legitimate market?
We've certainly seen some of that. I mean, we've seen rising production and exports coming out of Iran over recent months. We've had an easing of some of the sanctions on Venezuela, which has freed up a little bit more Venezuelan oil coming to the market. And with Russia, we saw, I think, back in sort of August, early September, that they'd followed through on a pledge to cut exports. We saw quite a dip there, but those crude oil exports are starting to come back. They're not as high as they were in sort of May, June, but they are certainly creeping up and have been doing over the last 2 to 3 months.
The oil bulls have been saying for a long time now that in the midterm, for several years into the future, demand can only go up over the long term, and supply will not be able to keep up. Do you agree with that narrative?
Well, you know, this is a mantra that I have heard since I started sort of analysing the oil market back at the end of the 1980s. And the big producing countries have always said the same thing, that demand will rise inexorably, and they're still saying that. If you look at their their medium-term forecast out to the late 2020s, they are still seeing very strong demand growth over that period. And they're arguing again that there's insufficient investment, that we're heading for a supply crunch. I don't think it's going to be quite as bad as they suggest it will be. I think there are signs of a a slowdown in demand growth certainly next year. Whether that is just cyclical or whether it is a part of a longer-term structural change, we'll have to wait and see. But I don't think that the demand growth going forwards is going to be as strong as it has been in the last 2 or 3 years. And I think that the investment tends to come on when companies can see clearly that their oil is going to be needed. And part of the problem is that with the big Western oil companies largely shut out of some of the key acreage in some of the biggest Middle Eastern producers, the oil that they have access to, deep water oil in the Atlantic or some other areas like the North Sea or West Africa, that is less economically viable when you have still very large volumes of very cheap oil produced in places like Saudi Arabia.
Julian, do you think OPEC is going to hold the line here and continue with their supply constraints?
Well, they have already set output targets for the whole of next year. I mean, they did that back in June. What I think this next meeting in sort of just over a week's time is going to do, it's going to, I think, ratify a lot of those production targets. Some of them are dependent on independent assessments of production capacity in certain countries. I think there will be pressure on those who made voluntary cuts earlier this year to extend them further. And I think it's very likely that we will see Saudi Arabia extend its own unilateral cuts, certainly into the first half of next year. And probably it will continue to look at those on a month-by-month basis as it goes ahead and trying to determine how strong or how weak the market is.